Financial disclaimer. The information provided in this stream is for educational and informational purposes only and should not be considered as professional financial or investment advice. We are not licensed financial advisors, and the content presented here is based on our personal opinions and experiences. Investing in stocks and other financial instruments involves risk, including the potential loss of capital. Any investment decisions you make are solely your own responsibility, and you should conduct your own research and consult with a qualified financial professional before making any investment choices. The content we share on this stream may not be accurate, complete, or up to date. Market conditions and financial regulations can change rapidly, and we cannot guarantee the accuracy or reliability of the information presented. We do not endorse or promote any specific stocks, companies, or investment strategies. Any actions you take based on the content of this stream are at your own risk, and we will not be held liable for any losses or damages that may occur as a result. Always remember that past performance is not indicative of future results, and no investment is guaranteed to be profitable. Make informed decisions and consider your risk tolerance before investing any funds. By accessing and using this stream, you acknowledge and agree that we are not responsible for any investment decisions you make as a result of the content presented. You are encouraged to seek advice from qualified financial professionals for personalized guidance. Please invest responsibly and only with money you can afford to lose.
Hey man, just found the next guaranteed multi-bagger.
Hey man, you found another one? What is it this time?
Come check this out.
Okay, next please. How can I help you, young man?
We want to go all in on Nikola. We love a stable company with a fraudulent history that changes management all the time.
Well, that's fantastic. A really smart decision, young man. We can put that check and it's gone.
Hey, what's up, man? How you doing?
Yeah, doing good. What do you think about Nikola here?
Things are looking. Actually, let me pull up the chart for Nikola. I don't know why I got this one up. This is looking good.
Yeah.
Very bullish. I'm pretty sure this is. I'm pretty sure this is dead. Welcome to Laughing Stock, by the way.
Oh yeah.
Yeah, they've had better days.
They've had better days, and I just saw it, according to my sheet, inside the ownership is almost 50%.
Well, that's gone.
Yeah, but I know they give a lot of shares to the CEOs and stuff like that. They have always done that, so I think they are like you said, maybe someone comes and buy them up, but I think this is end for them.
I mean, yeah, you never know at this point, but this is dead. This is walking dead. So
yeah,
you never know. It could bounce up to $1, maybe $2 based on the moving averages.
Yeah, and never forget M-Goal, right?
Yeah, people get bored. You know,
yeah, you can hear about it here. But Nikola, they it's a bit of a shame because they had a great business idea about rolling out hydrogen-driven cars and heavy transportation, like big trucks and stuff like that.
Right.
And the whole business idea was that they're gonna build out these filling stations, but then that that never happened, and they changed the path a bit, and then they just ended up like any of the other companies that they do like electrical vehicles and stuff like that. And then of course you can't ignore the, like we said in the video, the fraudulent history with the CEO who actually had to go to prison and stuff like that. So the idea was good, and would be beneficial for the world, but this was not the right company, I think, to pull it off.
Yeah, I think as soon as you have the fraud, that's what kind of kills it. Yeah.
I think he's out again, Trevor Milton, and he is determined to prove he's innocent, and it's just, I would be a bit careful if I were him, because I know a lot of people lost a lot of money because of things he said and stuff like that. And still, he can't even answer if they actually rolled the truck down the hill or if it was driving on its own. And
They
they
definitely
really
rolled
did
that down
roll
that
it
hill.
down the hill.
That was
Yeah.
definitely rolled down the hill.
Yeah, that was rolled down the hill. Which,
Drive it up the hill. If he wants to prove himself, drive it up the hill.
Yeah. Well, saying that though, they have produced some trucks, but it's just not enough. It's tough, you know. We talked about Elon Musk and Tesla and what he has done, and you know, it's not easy to make things work. But even if they had competent management, eventually, I think some former people high up in General Motors has taken over and stuff like that. You know, it's not easy.
No, it's not. And I mean, you've watched even big car companies kind of struggle to get into some of these alternative energy type businesses with their automobiles. So, I think I don't know. It's a tough business, and I think we were pushing so hard for these alternative fueled cars essentially, and it's kind of pulled back. I feel like hybrids have been the safe choice. You know, like if you wanted to invest in the hybrid, where you kind of have the best of both worlds.
Yeah.
It also depends where you live. You know, if you live in like a city environment where you're doing a lot of stop and go traffic, I could see why the electric cars and everything make a lot more sense.
Yeah.
But then I don't know. I think it's the technology will keep getting better, but
Yeah.
we'll have to see where it goes.
Here where I live, there's not a long big distances or anything like that, but or actually it is when you go up north. But there's a lot of electrical cars in my country. That has been a focus area, but and they have some good alternatives, but you know it's costly, and when you get them, the government starts to mess with the electric prices. So it's just. Yeah, I don't know. I own a gas driven truck still.
Yeah, I mean my vehicles are both gas. My brother
Yeah.
has a Tesla, so
Yeah.
and I mean I've driven and it's nice. It's really nice. So
Yeah, they are nice, and there's a lot of good options from other manufacturers too. Really, really solid cars. But yeah, Nikola never managed to deliver. So that was a shame. But let's see if they can pull out a magic trick or something. Maybe someone comes and buy them. But I don't really know anymore what they have that would be interesting for other companies.
yeah, I mean like you said too. I mean just whatever the proprietary patents and stuff they have, maybe someone can find some value in something like that. But
Yeah.
yeah, otherwise I don't know. And like just looking at the past few days, like this is so much volume being sold off. I mean we're talking hundreds of millions of shares being sold.
Yeah.
So like I don't know. I think this is just going to continue to kind of tread to death.
Yeah.
But who knows? We've seen them bounce down here too because it's so cheap to buy shares. So like all of a sudden it gets to a point where like no one really cares, and you got a couple nuts who come in here and try and pump this real quick.
Yeah.
There's so many instances of the bankrupt companies doing that. But in other great news, Friday was ugly.
Oh my God. And
Friday was
not
a
only
really
Friday,
ugly day.
Thursday too.
Yeah. It was a kind of the whole week was just tough. I had probably my worst week so far this year.
Yeah, I am the same.
Which
And also last week, like I've had 2 terrible weeks now.
the week before I was okay, but this week I was down 2%. Which you know whatever in the grand scheme of things, not that big of a deal.
No.
So it brings my month down to -1. Year to date is 3.66, and I checked the S&P's at like 2.5, so I'm still a little above that. But it's just been a tough year. I know you and I were talking yesterday about. What were you saying?
No, it's just been a bit like touch and feel. I think like we moved sideways for a long period, and then now okay, maybe it seems like it's going down a bit, but. We have never seen like stocks with crazy well, we have a few examples, but it's like my observation at least has been that it's been a bit careful since maybe the beginning of the year. And I'm similar to you. I'm like down 2% or something like that in the last 2 weeks. and since the year started, I'm down what was it, 1.75 right now. So I'm hoping to turn that around. But I have increased my win percentage for February versus January. So some things are up at least. And let's see where we will land in the end of the month after next week. But yeah, I think the big difference for the 2 months for me was we got the USEG winner in January, and so far in February, I've kind of missed out on some of the, like we talked about last week, missed out on some of the great winners. So I'm not happy with that.
Yeah, I think just some of the things I'm thinking of adjusting, just because I had pulled up where is it here? Not that. I pulled up, I just have some charts here, and these are just general, either they're mutual funds, which are kind of like indexed, or they're just indexes of the different markets. And, it's just like, the 10-day is still above 20. Everything's still in the right order. It's a sideways move, and you can tell, even since the start of the year, it's just kind of been sideways. So I wouldn't even need, it's not even that it looks like super bearish to me. Could I see a correction like somewhere in here? Yes. And, from that point on, there might be a week or two where you might want to take a pause. And I will say, just looking at the volume, and this is something that some of the, like William O'Neill follows, if you just look since the start of the year, there's been quite a few distribution days in here. We're talking 6 or 7 weeks of distribution and only 4 of gains. Yeah. So, once that starts to overwhelm itself, it will pull back. That's just simple supply and demand. So I'm definitely keeping an eye on things. RSI is still above 50, but you've all, just something I'm paying attention to, and it's not like this matters. I'm just looking for patterns. RSI tends to dip almost down to 50 in this past, 2 years or so, and then it will kind of take off from there. So not that it's like a perfect indicator, but, something to watch, like as this pulls back down here, maybe around the 50% mark, we can find some strength or something. And if it breaks down past that, I would start to really try and hold up my trades, because I'm working on, the market, the situation awareness. And I think that's a good way to kind of measure it. I will say, I'm taking less trades, this week than I did the week before, and this coming up week, unless I see a ton of things coming up, it's probably going to be the same thing. I'm going to keep pulling it back. And, I'm going back and forth if I want to start to take gains off the table at a certain amount just to lock in things. Or I think the other thing I might do, as opposed to just taking the gains, is set my stop losses higher a little bit faster.
Yeah.
Because that way, if something runs, it runs, whatever, and I can try and get it as high as I can. And if something pulls back, I'm at least, always breaking even, or even getting 3% or something like that, just to offset some of the losses. Because just a couple of those during the week make a huge difference, especially if it's a tougher week like this.
What's happened to me also, actually, I'm a bit curious on, because it has happened very often this week for me, but I didn't get stopped out at my stop loss. It kind of skipped over it, and I had to take a bigger loss on at least 3 positions, even 4. I think it wasn't like a crazy amount, but it's just in percentage, that adds up, and that's just a bit annoying. But I think that comes from maybe the stocks I picked had a little bit of too low of volume, and it just skipped over it.
Mm-hmm. Yeah, this liquidity, it's, the bid and ask spread, if it gets too large, then that it triggers. That's why some people use a stop limit, because the stop limit will say, I want you to sell under this, but only, don't drop below that either. So I don't know if you have that as an option, but that's something you could do.
No, I can put it like sell at this trigger level and lower, but it didn't sell lower. It just kept my position, so I had to erase the stop and then sell manually. And like I said, it's nothing big. I just don't want it to happen often.
Yeah, the only thing with a stop limit too is if it doesn't trigger and then you're stuck in it longer than you want to be.
Yeah.
I wouldn't use it. I don't personally use a stop limit just because I think it's even more dangerous if it like really skips past, because then you really get stuck in something.
Yeah.
You know, and I did make a mistake this week. I took MicroStrategy and pre-market, which it looked good, and I could have probably set a break even and gotten, you know, a safe exit, and I didn't, and it dropped on me immediately, and I didn't get a chance to get out, and I lost just over 6% on that. So
Yeah.
that one didn't help, and it's kind of a rule I've had. You and I have talked about this. I find if I buy something at end of day, my chances the following day of not getting kind of screwed on it is usually a lot better than if I do pre-market. Stuff that tends to go up in pre-market, you know, worst case scenario, because I know you had bought it the day before, you know,
Yeah,
you could
I
set
bought
that
at
at
the
break
end of
even.
the- I'm very disappointed on MVIS because it looked strong, right? It had the average days of volume in pre-market, and it was up like between 25% and I think down to 9%, and then it opened and just pushed it down straight away, and I also got stopped out on it.
Yeah,
So
and
that was a 3% loss.
in hindsight, I'm looking at this chart, and I mean, this is super choppy. You know, this is,
Yeah, it is.
you look at how, like, you know, how much this moves in a day, how volatile it is. Like, it makes sense to me that you're going to see this. And I probably should have known better. And to be honest, you know, even at the very top here, I mean, this is technically where you should have been buying, is up here, because we were almost to a breakout point. And if it would have failed there, that's fine. But it, like, this is really where you should have been getting in. You know, me getting in early,
Yeah.
you know, I'm trying to cheat, which that's what happens when you cheat. You can get burnt doing it. So, and just one of those names that, you know, it just didn't work.
No, it didn't work, but it was up in like 220, I think, in pre-market at some point. But who cares, right? It didn't end there.
Right.
So what does it matter?
Yeah. So
no, that was a bit disappointing with that one. And I think for me yesterday, we can go through the names a bit later maybe, but Applied Technologies, is that the name?
APLD.
Yeah. At the end of the day, I think it pulled back. If you look at the candle there, I tried to get into it on the way up there, and then it just ran away from me because it didn't trigger. But then it pulled all the way back to below where I tried to get in, you know. So at the end of the day, maybe good that I didn't take it.
Yeah, that's why I was saying, you know, whether I just start to raise up my stop loss a little bit more, you know, kind of making these risk-free trades essentially. Because a lot of times, like you said, these tend to pop, and then it's just a tough market. The breakouts are not working well right now. You know, since I've been doing this, this is definitely the hardest probably few weeks I've seen. So I would say that this is why, you know, I'm thinking like, okay, this is the market telling me to start to adjust. You know, don't expect some of the major profits that you did in the past. Now, don't get me wrong. Who knows? Next week could open up and it looks great again and everything starts taking off. I don't know. And you know, you and I had talked about this. Instead of me trying to make predictions, I'm not going to do that. You know, what I would rather do is say next week, you know, say on like Monday and Tuesday, we start to see breakouts work again. Well, then I'll start to take a little bit more risk on and get into some more names. But in the meantime, instead of keep hopping into a bunch of stuff and getting stopped out, and you keep watching something looks great, it looks like it's about to break out, and then, I mean, look at this day. I mean, it got all the way up to 1250 and then pulled all the way back down. I mean, that shows real weakness to me.
Yeah, it does.
You know, HIMS is a big example. I mean, HIMS had this huge run up here. You know, and this is why I say to use the 3 or 5 days, because if you'd gotten in on this breakout here around like the 40 some, you know, $50, whatever it is, if you had sold out on any of these days up here, you'd be fine. But then you hold it past that 3 to 5 day window, and, you know, the whole market showed weakness, and then you literally lost that entire move by holding it too long.
If you go
So
to OPFI too, because that chart has broken down, and you and I, we made money on it.
yeah, but once again, even if you had gotten in here, like, you know, like this is technically the day of breakout, or this is too, and you had sold in any of these days in strength, even if you had held it to this last day and it broke down on you, you still could have been at break even or plus 3% or something on this one. And this is a super strong stock. I mean, this chart's
Has been for a
great.
while. Yeah.
But now, I mean, like I said, just look at the distribution that's going on over the past week. I mean, you can just see it. People are selling off right now. People are kind of, you know, it just seems hesitant. Like there's a lot of volume that came in since the start of the year, but February's been almost the exact opposite. Like kind of weak buying at the start of the month, which don't get me wrong, we you know, capitalized on some of those breakouts, but ever since then, stuff's just been selling out.
Yeah. Yeah, the first week was very good for me, but the last couple of two, like you are summarizing very well now, it's like the breakouts have just, they've started up and then they have pulled back, and at least I've been stopped out on most of the positions.
Yeah, and kind of to what you were saying, I think one of the other things going forward this next week is I'm going to focus on ones that really have strong volume. You know, maybe I'll get in a little bit later on some of these names than I would, because usually my goal is to get in nice and early. But instead of necessarily trying to cheat a little bit by getting in early on a name that's starting to break out, I'd rather just be a little bit safer. I'll wait for that real heavy volume to come in on a name, and that's where I'll get in. And if I get stopped out, I do. It's not the end of the world. But like CYD is one of the ones that, like, you know, I didn't get in because it had ran a little bit. But it showed excellent volume, and I mean, just look at this chart. I mean, this is the one this week that would have offset everything.
Yeah, for sure. And
so,
in terms of percentage, if you start to do what you just said, what's the limit that you will not jump in on? Like, will you raise it to like 10% and you will still take it, or?
Oh well, I would always take things up to 10%. 10% to me is still fine. You know, yes, I prefer to get in under like around 5% that it's broken out. 5, 6, 7%, somewhere in there is typical for me. Sometimes I go in at 4. I find the more I go in at like a 4% up, the more chance those ones fail. But on the ones that it works, you know, it can really benefit you if you catch any of those days. But yeah, my focus is just going to be on stuff that's showing really strong volume for the next, I think, week or so. And then, like I said, it'll just keep being, you know, seeing how things are working. But on this, like, you know, if this, maybe I'll go up to like 12%, you know, somewhere around there. And like I said, if it pulls back, it's not the end of the world. But, you know, you want to catch some of these names. If you can catch 1 or 2 of these names and you're not going into a lot of things, I mean, you can make some huge returns in some pretty bearish looking weeks.
Yeah.
And there was. I mean, look at MLGO. I mean, now this isn't something I would go in, but I mean, this is a crazy stock that bounced off the bottom. It was up like over 1,000% at one point, I think, yesterday. Now, this isn't my kind of style, but my point being is, even in these bearish markets, there's things you can get in, and I'm not saying it's bearish right now. It's really just moving sideways. You know, that's the whole point. I was looking at all these, and you probably were, you were talking, but I was just scrolling through looking at some of these things. And, you know, you can see we're right on the moving averages. Some of them have broken down. Some actually, the moving averages are starting to collapse on each other. So there is some weakness in some of these markets. So we could be in a period such as like the end of 21 where it moves kind of sideways for a while. You know, especially, you know, I mean, this was coming off COVID, so crazy run up here. But we've had a pretty good run up for 24.
Yeah, we have.
You know, it was a good year. I mean, even this, if you had bought down here, I mean, you're up 25%, you know, and that's what the S&P, you know, everything up last year was up about 25%. So, will that continue? Probably not for too long, because now it's been a while, you know, almost, I mean, look at this. This is almost a double from 2023.
Yeah.
I mean,
maybe it's healthy if we get a bigger correction.
Right. So, you know, and will I say it's going to collapse down? Like I said, my goal from now on is not to predict that. My goal is not to assume anything. I just like to see what's happening. I'll make my decisions as it goes. You know, the problem is, you know, any kind of opinion I get or whatever about something, it immediately affects the way I view it. And my goal is to just go in with a clear mind and not have any kind of biases towards things. and just, you know, as I see something collapse, another thing I started doing is I have the intraday chart up. So yesterday, for instance, I'll have QQQ up, and I'll have just the like intraday chart, and you can quickly see on the intraday chart, like you just watch the day start to slowly collapse. And to me, if I'm seeing that, that's during this entire collapsing phase, you basically might not even, like, I'm not even going to take something during that phase, because the chance of the breakouts failing once the whole market starts pulling back, I've been watching it now all week, and it's like correlated perfectly. Every time it's pulling back like this, there's, I mean, and look at the end of the day. Look at the selling at the end of the day here.
Yeah.
I mean, to me, it just it's just confirming that we're just tight. Everything's tightening right now, so the breakouts aren't going to work as well. You know, this is a good time to actually focus on fundamentals. You know, earnings, that kind of thing. The one name I'm in is SABR.
Yeah, same. I took it yesterday.
So this is the only one to me on this breakout. You know, I thought there was good strength there. And like I said, I'm gonna have my stop loss. It's already at break even here, which I'm not up that much. But you know, like I said, that's the way of kind of offsetting these risks on some of these times where it's tighter. And just to point out, because I'm sure you guys saw my portfolio, I did start to build my USEG position. And this is more on the value side of things, which you might argue that it's not really a value stock, which that's fine. And I'm up to about a 2% position here. My goal is to get it up to 10%, but I'm not rushing. My cost basis right now is just above $2. But one of the things that you and I had talked about is the insider buying on this. I think is great.
CEO is buying a little bit very often.
So, you know, not only do I like the way the business is pivoting, but when I see a CEO buying like this, which, you know, it's not like the craziest amounts, it's just the consistency with it, you know.
Yeah. And he didn't sell when it spiked up to $6.
And I mean, his cost basis has got to be pretty good.
Yeah.
I mean, we're talking, you know, it's sub $1 or whatever here, or around like $1. Who knows? Just above $1 probably, because he already had. Well, actually, is this when he took? No, this is a different guy. So you know, this is, you know, a bunch of his shares. He's already owned.
Then if you go up, you can you see you have last 2 years. Yeah. But there's no more. Yeah. Okay. So that was it. But yeah, consistently buying since September.
Yeah, I mean, but this is, you know, director 10% are in here now. Whether these guys are still holding, I don't know. I don't see a sell.
No, I don't see a sell. And you know, you have talked about that article too. If people are interested here, they should read that article. I think that pointed out a few of the things that you liked about it, and you saw the balance sheet also, right? It was pretty clean.
Yeah, they have no debt right now, and they actually have a they just raised more money to cover everything because of the helium assets that they acquired. And like I said, you know, outstanding share count's 28 million, and you know, just from the insiders here, you know, this Marsh owns 3 million. You know, he owns over 1 million. There's another one here, owns a couple 100,000. I'd have to go into the actual 10K again to see exactly where it's at. But yeah, it's just one of those names. I think it looks tight enough here that I'm interested. Now, yes, it's pulling back here, and we're now around that 50-day moving average. And my goal is to keep the stop loss at 10%. So it'll be around $1.80 if it breaks down past that. So if it starts to break past this 100-day moving average, I'll just close the position. That's kind of my sell there. So it may be mistimed. I don't know. I mean, I know this whole upsell thing has kind of gone crazy, but you and I were more talking, you know, if you just look at the general stair step of these breakouts more in here, not these crazy days. You know, I think the overall chart looks good. If you
should open up Whale Wisdom and see, because they have some big owners, Dayne.
Yeah, we can.
And I think you will like one of the names even. Maybe it's even you. top name there.
Oh, there it is.
King Dayne, right?
Yeah.
But they have some. Look at that, 35%, 22%.
Right.
A little bit of selling there, but
Well, and these
these
guys
are
could have been
probably-
offloading during this wild run up, to be honest.
yeah.
I wouldn't blame them, but they also, hold a lot of shares. So
Yeah. So those are probably founders and stuff like that. So that's something that we have liked in the past when there's heavy inside ownership.
yes, and I mean, like you said, you see a stock like this, it runs up to $6 in a day.
Yeah.
You're gonna see some selling from these big guys. It just makes sense.
Yeah.
But either way, I mean, that's a lot of ownership right there. I mean, that just goes to show you how little float's actually out there, which is why you'll see that kind of spike in a stock like this. So
Yeah.
we'll see. I'm more focused on the holding period will probably be at least through the rest of the year because I want to see the helium play start to work out. But I think this for now will kind of be my value play that I'm going to keep in the portfolio. And if another thing we get into looks interesting, maybe I'll delve into something like that too.
Yeah. I think I've been spending the week, not exactly spending the week. This week I've been watching on YouTube some interviews with the traders and stuff. And when we speak about in this market that we are in right now and that we look for heavy volume and stuff like that, I just remember, I can't remember which one it was, but he said that at least in some periods, if the position is not up by the end of the day, he just sells out because he doesn't want to go to bed and be thinking about a losing position. So he just sells it off and keeps the one who has jumped up that day. So maybe with time I will adapt a little bit the strategy in different market cycles, and do more things like that. Just to not worry about the pullbacks and stuff like that. But of course, you're going to miss opportunities by doing that too. So it's going to be something you need to get some experience with, I think, by doing. But I can see the benefits of that too.
Yeah, for sure. Like I said, there's all kinds of little things you can do to, kind of help cut some of those losses back. And who knows, even going forward, maybe I'll keep some of this adapted. If it works well in the bearish market, it should work well in a bullish market too. It should be even easier. So if I find that I'm able to continue to be profitable, even in some of these like sideways movements. Now, if it's really bearish, there's probably going to be so few breakouts that like it'll kind of be hands off. I'll just kind of be watching, probably doing a lot of what you're doing, watching interviews with people who have been through these periods, seeing how they play it. I did watch some of the interviews that you sent me.
I like them.
A lot of it was on Trader Line, which shout out.
Yeah.
We don't know him or have anything to him, but his interviews are good. He has great people on, is what I should say.
Yeah.
Interviews really
I
smart,
saw,
great traders.
I've been watching a couple with David Ryan, I think the name is right. The guy who was working with
William
O'Neill.
O'Neill, yeah.
Yeah, and his son. I saw one of his son. It was interesting to hear his son because that was very similar to what we are doing, I think.
Well,
all of these, by the way, has been the trading championship winners in the United States at some year, So at least they have some performance to show for. Even the son won it twice or something, I think. And then of course Mark Minervini. He has on there a couple of times that I've been watching. So no, I just I found some value in them, and I've been thinking about adapting some of the things they said to my process and also my chart layouts and stuff like that. Just to have a couple of more things to look at. And you touched a bit on it with watching the intraday chart on the market and the RSI on it and stuff like that. I've been thinking to maybe implement that a little bit more in the process.
Mm-hmm. Yeah. It's always good to listen to those guys because there's so many insights, and you can listen to those interviews and catch different things each time. And
Yeah.
as you evolve, I could read the same book probably 10 times throughout the year, and just because I'm at a different place each time, I'm going to notice little things I didn't before
Yeah.
because I'm at that point where that next tidbit of information matters more to me.
Yeah. And we have talked about this before. I don't know, remember on the stream or not, but how many times have we watched episodes from Roaring Kitty and we are like, oh, that's what he meant. Oh, I didn't see this. I didn't understand this the first time I watched it, but now that I'm a bit better, I understand very well what he was saying. There's so
Right.
many layers.
Right. And we've talked about it. We have different screeners and stuff through the day. And another thing that I always am kind of watching is just what my numbers are. And for instance, of stocks that I see that are high performers for the day, Friday there was only like 20, which is a
Yeah.
really low number for
Very
me.
low. Yeah.
And I even opened that up. I opened that up to a lot of things I don't normally even invest in. Small market caps, high market caps, stuff without as much volume per se. And
Yeah.
even there's only so many names that are up. So your chance of getting into one of those names is low. Celsius, that was one. Kind of bouncing off the bottom here. Looked pretty good, but
But SABR was one also, though.
what was it?
No, the one you said you were in, SABR. I also am in that one, but that so far it has worked out, and I took it on Friday.
Yeah, I like that. And I like CXDO. I did get stopped out of it, but I thought CXDO looked pretty good.
Yeah, I'm in that one too. Those are my two positions now. And I haven't been speaking about SSRM, but SSRM had a earnings report this week, and they missed on some estimates, but the overall commentary on the development in Turkey and, I wouldn't, maybe not exactly guidance, but just like some things that was pointing forward. I think the market interpreted it as very positive, and I did too. So that had and SSRM is a deep value play for me, even though it looked good with swing trading too now recently, Dayne, right?
Yeah, I actually I was swing trading this, but it actually turned into, I just took the profit. I was up, I had taken it on Wednesday, and I was up just above 10%. So, one of the things, like I said, going forward is just to lock in some wins. I just sold at 10%. I just took the gain, which seemed like the right move. So don't get me wrong, it might go up on Monday again because it showed some selling days, but it didn't really sell off, which it looks bullish to me. So who knows? Maybe on Monday I'll get back in. Maybe I don't even know, but
so
but
this has grown into my biggest position now.
Yeah. Well, I mean that's awesome. I mean that's the whole point of the deep value play. That's how USEG will be. My hope is that it can get up to at least a double. I could see it reaching $4 if they really start to change around their numbers. And helium starts to really pivot the business from just traditional gas and natural gas. But
and
we'll see.
Just to finish with SSRM also, like I'm up on it now. It's a little bit more than a double, but I'm still in it. I haven't sold anything. I don't think I will right now. I think because my thesis on it all the time is I want to know the situation in Turkey, and I'm fully aware if they fail getting that mine up again, this price will fall again, I'm sure, but I'm not sure if it will fall down to my entry, which was 4.5. So I'm in it. I'm not going to sell before I know more about the Turkey situation, I think, because in the meantime they have made some acquisitions, and if you read the transcript, they are very happy with some of the performance of some of their mines now. One of them has delivered fantastic numbers for Q4, so I'm excited actually about SSRM.
Yeah, no, I mean the chart and the whole business looks good to me fundamentally. And I was just gonna say I think miners are performing well.
Sorry?
I said I just think miners look good right now because of
Yeah.
people are investing in gold and in other metals. So
Yeah. No, I agree. So yeah, let's see where it goes.
so for your sellout on this, being it's a more of a deep value play, are you focused really just on the business itself, or are you looking at moving averages, or some kind of combination of both?
It has turned a little bit more into a combination of both, but my initial idea was that I can see it go to the level it is at today. So initially I would be happy here, but then we have not heard about, there's no conclusion with the Turkey mine,
Mm-hmm.
and I think obviously the market liked the commentary about it now, which sent it up. I don't remember how many percentage it was up on the day after the earnings report. But I think it can go higher when we finally conclude what will happen there. And that's what I'm waiting for still. And maybe I will lean a little bit on the averages and stuff like that if it starts to drop or something. But that's I think I'm just going to wait a bit with this.
Gotcha. Yeah, I mean, I don't blame you. It's the same thing with USEG. Like, I figure if it does pull up from here, maybe I would keep one of these moving averages, as like a low base. Once the moving average gets over my 10% loss, I'll probably adjust my stop loss to that moving average. And I would probably do a long ways away, like the 200 moving day average or something. Like I want it to really break down if I was going to get out before, I think it reached true value. And in that case, probably the whole market's pulling back. Like if this drops all the way, either like something's totally collapsed in the narrative, or the whole market's really pulling back, which in that case, I don't mind getting out back here somewhere. Like I said, this would have to overtake my 10% stop loss. So this moving average here would have to get above $1.80, because that's probably about where I'll be. Who knows? If it keeps going down, I might be able to get my cost basis lower. So like I said, right now it's right around $2. So I might be able to get it lower and then
see from there.
Yeah, see from there. But if it does overtake it, then that'll probably be my way out. Otherwise, I'm going to hold and I'll have to do some calculations on where I think the actual value of this would be. But I could see it. I could see it get all the way up to. From what I was calculating, I could easily see like $7 to $8.
Yeah, I was going to say like between 7 and 10.
Yeah, so I mean, great, makes to 10. That's a huge return.
But do you have a plan? It's a bit interesting. Do you have a plan for this if you get your position in? Because historically also this has some of those big spikes that we participated in for swing trading. Do you have a plan for your position if it gets another one?
Well, to be honest, the fact that it jumps up so much sometimes, if it really did and I was able to take like a 200% return or 100% return in a day, I probably would sell there. And then I would wait for it to pull back. And that may be the wrong move, but in my mind, I think of trading now. Trading is when you take, excellent gains in the short term, where deep values, you take excellent gains in the long term. And those excellent gains in the long term, it has to be like at least a double, and usually like a 2 or 3 bagger. That's like bare minimum for a deep value play in my mind. Like you shouldn't be going into a deep value play where you're going to hold over the course of a year or so, unless it's going to be 2 or 3x, because the rate of return from swing trading is higher then. So, if for instance I got lucky and that's all it would be, because when this jumps up to $6, either there's some great news that already came out, which there has been good news. I mean, that's why you've seen these spikes. So like I said, if it was in the short term, and who knows, if 5 or 6 months go by and it jumps, well, then I'm probably less apt to take it on that trade, because now I've held it for so long. I want it to be that 2 or 3 bagger. So, if it happened in the next month, maybe I would sell out. Because at that point, it's such a short time frame that you might as well, take the profit. If it starts to get where I've been holding for half a year or a year and then it spikes, I might hold there, because now it's a true deep value play, and let's see where the fundamentals of the business should push this higher. But just remember, we've been talking about this. These are 2 very different strategies. So if you know, and this is never financial advice. Don't buy any of these things based on anything we're saying, please. But you know, making sure that you understand the way to handle like a deep value investment type philosophy versus a swing trading philosophy. Those are such different strategies. It's super important to know the differences. And if you've only done one or the other or haven't done either, do not mix them. You know, because it will only make things so much more difficult for you. You'll constantly question where you're at. I'm setting some rules in my head just because we did deep value I did deep value for 3 years, so I know that strategy. I think pretty comfortably. And I've been watching swing trading now for about half a year, and I feel like I'm decent at it. So even me, I'm still. I mean, we always are talking about we're learning. We you know, the whole point of the stream is to watch you guys. You know, hopefully you can watch us mess up so you don't have to, and you can do better than we do along the way. But to be honest, you know, you and I have talked about it. We've watched so many swing trading videos, and so many people, they blow up their account, and then it's once they've blown up, they realize like, okay, you have to take this serious because the market will just crush you. So it's one of those
almost
things
like
that. What'd you say?
no, you almost hear it from every single trader that I read about or I hear speak. They all say it.
There's very, very few traders out there who just get into it and start off doing pretty well and just get better. Most of them have huge failures somewhere along those first few years. And then they finally start to work on improving those things. And I've made the mistakes here. And I've gotten to the point now where I'm not going to make those mistakes, or very few. You know, I mean, sometimes I'm still learning and I'll try something and it kind of bends my rules a little bit, but I'm not like breaking massive rules I've set anymore. And we'll
think
see.
Mark Minarvini, he said it took him 6 years.
Yes, he said.
Not only that, he lost money. He lost money for 6 years. He said.
Yeah, well, even
Which is,
I thought the interview with Sean Ryan, who's David Ryan's son, was good because he said even after learning from his dad, who's an expert in this, literally could tell him exactly what he does, he still blew up his account.
Yeah, and blamed it all on his father.
Yes, and then he said he's like, I feel like an asshole because I blame my dad for all of it. But you know, more props to the guy's dad for, you know, just being like, it's all good. Like, I get it. And you know what it's like when you have some really bad days and stuff like that, and it's just so frustrating, and you know, you hate yourself for doing something stupid.
I felt it was an excellent interview by him too. Not only the guy who was interviewing him, but his answers and his it makes it relatable, you know.
Yeah, and it's important to know that people go through it.
Yeah, and even with expert help, like you said, like I also texted you, I'm sure it doesn't hurt to have direct access to his father, but he still had to go through. And he said he was so sick and tired of it that he decided to fully quit.
Yeah,
and he came back, and then that's when he started. He got some distance to it, and that's when he started to do well in that championship.
Yeah, and you know, it just goes. This is why, you know, you and I were talking about it. Like, don't break the rules. And it sounds so dumb, but it doesn't matter what strategy you do. You know, you could be a Warren Buffett style investor, and you know, Charlie Munger and rest in peace, and you know, Buffett. They say, you know, these are the 4 rules that you have to go by. You know, you find a strong business that's got a competitive moat. You know, that's a market leader, and you're just looking for a price that, you know, means that it's not totally overvaluated, and that's all they do. And they said, and as long as you do that, you'll be fine. And you know, it sounds so easy. Same with swing trading. Like, you know, you look for a breakout, you make sure it's got a decent amount of volume, it's following a consolidation, and the setup looks good, and it's some kind of market leader, or it's got some good narrative. If you just bought on that alone, you do well, especially if you have good stop loss rules. Most importantly, to have good stop loss rules. And if you just followed those few things, I can't see you not being successful. But actually carrying that out and following those rules is always so much harder than it sounds.
I think this is a big important point here, which also I was realizing during the interview with that Sean, what is it, Sean Ryan?
Yeah, Sean Ryan.
Sean Ryan. Because he didn't, his father is like the student of Can Slim, and he's in that style. But Sean Ryan was not. He said like that I understand that framework and it works really well, but he said that he thought it was speaking to a certain type of investor, and he was not really into in that lane, you know. So he freed himself from that framework and started to reflect on his own trades and learn from his own mistakes and stuff like that, and he developed his own system a little bit, you know. It's very similar still to CanSlim and to what we are doing, but I think it doesn't matter who you are and who you have access to. You need to adapt this to your personality and your own style, and come up with some rules. And I think that's where it's important to find maybe 3-4 good people you want to listen to, and try to put something together that fits you.
Yeah.
In terms of rules, in terms of risks, in terms of patterns you should look at, you know, all types of things. You can mix everything together and create a good system for yourself.
Yeah, no, I think it's all good points. Yeah, the reflection thing is huge because, you know,
Yeah.
I think in those first, you know, 3 months where I made a ton of mistakes, and even during that I was lucky because it was a good market and there was a lot of breakouts, and there was so many opportunities. And I look back now, and now I'm like, man, next time one of those come, you really got to take advantage of those time periods, because it's just, they're not all the time, and you can really kill it in those periods. And, you know, we might be in one of those periods now where 2 or 3 months go by and there's not a ton of breakouts, and it's just tough. And that doesn't mean you can't catch breakouts, but
that's a bit dangerous too, though, Dane, to start in an environment like that, because you maybe, I know you didn't do this, but people can think they are the king of trading, you know. Everything works.
well, luckily I'd made enough mistakes up to that point to know I'm not bulletproof. So you know, even in those good periods, you know, it helped me to recognize like that we're in a good period, and, you know, these things are working out, and to see that, like I said, you know, I was able to see, you know, I was just talking about end of day stuff that looks good to me, that's up, and, you know, it just gives me an idea of how many things are moving. I said there's like 20 on Friday. There used to be times where there's 100.
Yeah.
So, like, you know, that gives you an idea that, like, you know, now it's the odds of picking one of those winners is down, you know, 80%. So that's a huge difference when, you know, back in the day, I could have thrown a dart at any one of those 100 stocks and done okay. Well, now there's only 20 of them. So you got to be really particular on which ones you're getting into. And the other thing is, you know, like you and I are talking, there's so many of these names that they break out and then they come right back. And it was all week. All week I saw this. I think Black Sky was one of them. You know, there's tons of these where they up for a day. And look at where it peaked at, almost $22. And then,
everything,
you know,
looks
by the end of Friday, it's down to 17.
Yeah.
So
and what do you say, Dane? In my eyes, it's so obviously a mistake when you know where it ended, but it wouldn't be a mistake to get in there on which day, like 3 days ago. Everything looks fine.
I would have said on the this day here. This is where, you know, somewhere in here is where it breaks out to me.
Yeah.
And then, and then, you know, on this day too, you know, shows a lot of weakness. And that's the thing is, like I said, just if the general market overall is kind of weak, it's probably a good reason to be, you know, at least setting that stop loss to break even.
Yeah.
Because worst comes to worst, you take a trade and it doesn't work out. I mean, if you break even, who cares?
Yeah.
Anytime you can break even, just remember that's essentially a trade that you took that there's no way you're going to lose any money, and your only possible upside. I mean, that's if you could do that constantly, I mean, you know,
it's worth it, because one day you will get into the USEG and get 100% in just 3 hours, you know.
Right. And if you catch one of those names, and that's why we talked about it. Like, you know, I kept thinking, oh, should I loosen my stop loss? And it's funny now I think, like, could I push it to 2%? Could I push my stop loss to 2%? Because just in general, if it's at 2%, you know, you really have a lot of opportunities to make mistakes. And if any one of them works out, it really offsets that. So
Yeah. No, I agree a bit with that thinking. I've said it in the stream before that it goes a bit against what we are doing if the trade, you know, goes into a losing position straight after you take it.
yeah, you know, whether you just timed it wrong on the actual entrance of the day or it's just not going to break out. You know, if it goes down 2% since you've gotten in, you probably missed your entry.
Yeah, you have done a mistake, you know. So no, I've been thinking the same, and maybe yeah, maybe you will see us or I can almost guarantee that you will see us change strategy eventually here, but yeah, it's interesting. It's so many things you can do that people have great success with, right?
And
You
know,
want to start
it depends too. You know, like one thing I'll say is if a stock is a lower price, like let's say it's right around $1, you know, setting a 2% stop loss can be tough because does it go down 2 pennies? It can very easily. And I know that's no different than if you're at $100 and it hits 98. You know, in the grand scheme of things, it's the same. But just in terms of volatility of those lower price stocks, you tend to see that price move more. Now you'll see that in the chart. I mean, you can tell how volatile something is, which is like I said, that's why getting in your entrance is super important. But
do you look at the spread in any way here, Dane, when you determine the stop and all that?
I just glance at it. It's not like I'm like I said, what were we looking at before that was so choppy?
MVIS.
Yeah, MVIS. So MVIS, you know, I see this and I expect on something like this where it's got these huge moves up and down. This is one you know, if you get stopped out, you get stopped out. It is what it is. But that's why when I look at this one, you know, in hindsight, I'm like, this really wasn't a great one to get into. For number one, I didn't enter it right at all. And number two, the chance of this pulling down, you know, even 3% is high.
Yeah, that's high.
So, you know, I don't want to get into things just knowing I'm going to get stopped off, or my chance of getting stopped out is super high too.
Yeah. But at the same time, you have the BBAIs and stuff like that. This also had a few signs that it could run up, you know. So maybe it's worth it if you are confident that you will only have a 3% loss. Maybe it's worth taking a position just to be in it at least.
Well, and that's kind of why, you know, I feel like I take kind of like that shotgun type spread approach where, you know, on any given day. Now, yes, as the markets tighten, you know, I'm not going to go into too many names just because you don't want to get stopped out constantly, because it does eat at you. But, you know, in a good bull market, if there's, you know, 15 names that are up, yeah, I might shoot for 5 or 6 in a day because all I need is 1 or 2 of them to work. And, you know, especially in a good market, they can be up 20%, 30% a day. So, and that offsets and that makes your whole week, you know. So, you know, am I worried about taking 5 or 6 trades in a day when it's good looking? No. In this market where it's like stuff's all pulling down, yeah, I'm only making maybe 1, maybe 2 trades. And like I said, the criteria gets tougher. I might tighten my stop loss. I'm going to bring my stop losses up quicker than I normally would. And yes, it's going to restrict the wins. But at the same time, too, so many of them are breaking down that it's tough to make it work anyways. This is just a tougher market right now, at least this past week or two.
Do you have an average on how many trades you have done so far per month?
Per month?
Yeah.
I actually haven't kept track of it, but just a ballpark figure. I'm sure my average is 3 to 4 trades a day.
Yeah.
Lately, it's probably been more like I would say like 2. I've definitely pulled back, but that's the thing, you know. Like if I'm taking 3 or 4 trades and I all of a sudden I'm seeing only one of them work out or none of them work out on a day. You know, it only takes 2 or 3 days of that in a row where you're like, all right, like we're not doing this because If only one of them's offsetting, if you're trying to offset like, 6 or 7 trades with one, your odds are terrible. Like that's a really tough market. If you're talking your success rate's like 12%, you gotta change something there, whether it's the amount of things you're going into or your stop loss, or just stop trading. That should almost just be a sign that it's not worth going into some of these names right now.
Yeah.
But
Should
yeah,
we go
so just working on different things like that right now. That's where I'm at.
Yeah. No, it sounds good. What were some of the names you looked at this week? I think we have gone through the ones I'm holding. CXDO and SABR is the only two I'm currently in. I like both of them. I'm a bit up. CXDO I've been holding for 2 days, so I'm going to sell it on Monday.
Yeah. Trilogy Metals is one I was looking at. I didn't get into this one. I was watching it and I just didn't take it.
Yeah.
And really part of it was, yes, there was good volume here, but Friday, and I should have thought about this. I mean, if this is going up on Friday, nothing's going up on Friday. So it shows good strength.
Yeah.
And it wasn't a breakout. So this is probably one I could have considered. I've been in this one before and gotten stopped out, so I was a little hesitant just because the name, but it has had good breakouts.
Yeah.
I'd argue one here, and then on this, I think this is maybe the one I got on, and then or maybe I don't know.
I actually I kicked out some names on the watch list yesterday because everything was breaking down, and like I said last time, I'm not worried about that because if they perform well, they will enter my watch list again through the scans,
Right. That was one I missed.
Yeah. I think. What do you think about the CLOV chart, CLOV?
Yeah, I mean, we're definitely in a consolidation phase right here.
Do you think about the last candle there that it actually reversed? It was on the way down, but it got up again. Is that a sign of strength here to you, or?
I mean, it goes to show that there's not a ton of sellers right here. But overall, the days are, I mean, this is really tight consolidated. Don't get me wrong. This could break out. This is kind of what you're looking for. This is a good time period.
Yeah.
I will say too, though, it did just consolidate. Like, look at this low volume all in here, and
Yeah.
it's consolidated, low volume. The moving averages are together. These ones are starting to catch up, and still doesn't really do anything. And it's been up and down now, so it's definitely gonna either break down or break out.
It has earnings in 5 days.
So, what do you want to do with that? Do you want to try and go through earnings or?
Yeah, exactly.
Earnings on a company like this with a negative PE of 23, that's either going to be pretty bullish because they're working on things, or really ugly.
Yeah, I have to say though, the last 3 earnings they have surprised positive, but that's why I
look what the company's done. Look at the chart.
Yeah.
So another surprise, I'd argue, is very bullish. But
yeah, another one I have is PGNY. A little bit different, but
yeah,
they all have.
I actually think I don't remember if I took this one and got stopped out or I was watching it.
Yeah,
I may have taken this one and got stopped out.
5 days.
I definitely was looking at it.
Yeah. I like CLOV better just on the setup because I would prefer this to be a bit longer up in the move. You know what I mean?
Yeah, I'll say just fundamentally, it has earnings, so that part's better. But sometimes earnings work against you. This is something we joked around. Like Tesla before it had earnings, the narrative is literally just we think they're going to keep growing, and the numbers don't really matter yet because they haven't, there's no proof. Then once all of a sudden you get actual numbers to come in, sometimes that can work against you because now you have real tangible numbers, and now you can start to calculate where these things really should be valuation wise, and it kind of that honeymoon period of this is going to be worth trillions of dollars. It can go away because now you know what the real numbers are. And don't get me wrong, they've done well, but at the same time, that valuation before, same thing like when something's about to go bankrupt and then all of a sudden they kind of get that like last like little bit of help. The valuation goes from dead to something, and just that change right there, that optionality we've talked about. It gives it hope and it gives it like a higher valuation. It's really on like a time expire, but at the same time, it at least gives it some time.
Yeah.
But in terms of a consolidation, I agree the chart looks better for CLOV.
Another one I had, or I'm curious. I'm just going through my watch list, and Friday was ugly for a lot of these. I'm considering kicking them out actually. But what are your thoughts on PBI here? We know PBI from before. Justin has a big article out. I have not managed to read through it, but I saw him on X talking about he doesn't think it's unrealistic that this will go to $100.
I mean, I'd like to say that about everything I buy. This is another one. I caught this. This was one of the other breakouts I got in. It worked. So
yeah. I was trying. I got stopped out on this one. Even I got stopped out of it.
Yeah. Where it goes from here, I don't know. I mean,
No.
we've had a lot of move ups. I mean, this is 1, 2, maybe you can argue 3, 4,
Yeah.
5 breakouts now. And, after 5 breakouts is where I always get hesitant because,
And the volume is shrinking too.
yeah, you almost have to zoom out. After like 5 breakouts, it's almost like I want to pull up like the weekly.
Yeah.
On here, 1, 2, I guess you could argue this is one big breakout, 3. So maybe it's got some more room to run on a weekly.
Yeah.
But you're looking at longer time frames now. Longer consolidation periods.
Yeah. If anyone is interested and have Seeking Alpha, there's, Justin, he writes proper articles. And you can agree or disagree, but there's a lot of info there at least.
Yeah.
GRRR was a familiar name that we both looked at on Friday.
Yeah, I got stopped out.
Oh, you took it?
Yeah, I did. I got stopped out.
Yeah, because that pulled back like the rest that we are talking about. But yeah.
Yeah, I either took this on. I think it was yesterday, but it was either yesterday or the day before. I think it was yesterday.
Yeah.
But yeah, stopped out immediately almost. So.
Yeah, that sucks. And CURI also pulled back a little bit on Friday, but CURI, I looked at it as a bit promising if it could have another good day, but then it turned around.
Yeah. Just moving sideways right now.
Yeah, I'm keeping it on the watch list. Here's a chart that I think is a bit interesting. ENFN, Infusion.
Sorry, what was it?
ENFN. No, EN.
FN? Oh,
Yeah, like this, yeah.
I thought you said my bad.
Because look at all the tight candles you have in the consolidation phase there.
Yeah, I mean this is definitely a breakout. And actually I kind of like getting in late on this one just because this had this huge pullback.
Yeah, I agree.
Like this would have been a tough one if you got in. Now, if you got in way down here,
yeah. I would be okay there, which is almost where it is.
Yeah, I
right
will say
now.
though, I mean, but if you actually look though, I mean, it was only up 2% at the end of the day.
Oh yeah, I didn't notice, but the
It looks
ADR
better on the
is really
chart than
low.
it actually does. That's what I'm saying. Is like sometimes you want to look like so. Like this whole move has been barely 3%. Normally, this wouldn't even make my list. Like I wouldn't even look at this because that's not enough.
No, I see from the bottom it's up 43%. I didn't see the ADR on this, but yeah, true.
Something I'm watching is, you know, what is the actual move here? Because sometimes like the candle looks huge, and then I look and I'm like, oh, it's like 3%. You know,
Yeah.
like, and I'm like, it's not nearly as good looking as I was hoping.
Yeah, which also explains all the tight candles, I guess.
And it's done this a lot, where, you know, it's had some of these days where it runs up pretty high. You know, like there's a few candles on here where it had pretty high highs, and then like this candle here, this is a 5% move, but it got up to $10.
Yeah.
You know what I mean? Like it's kind of weird how speculative this gets. It runs high and then pulls back pretty quickly.
Yeah. Let me check here. What is F? No, hold on. DC maybe.
What was it?
DC. They also have earnings in 4 days, so it's a bit tricky. But
Yeah, I remember seeing them on Thursday go up. I didn't take them. But really, in my mind, this is almost like the first move up. So
yeah,
I
maybe
guess
watch
you
it
could
for
argue
earnings.
this is sort of a breakout. But another one that pulled back hard, this would have been a stop out.
Yeah,
So
on Tuesday, and yeah. But if they have good earnings, you will maybe get the second leg up, and maybe you can catch some of that.
yeah. So yeah, I don't know. We'll see. I think, like I said, my big thing going forward this next week is I'm going to adjust the stop loss type goals and try and make it where if I am going into things, my risk is extremely low. Because, I mean, you know, for instance, let's say you take 10 trades, you have a 2% stop loss on those 10 trades. It only takes 1 or 2 of them at a 10% win to offset the rest of them.
Yeah,
You know,
which is kind of where you want to be, right?
yeah, I mean that sounds great on paper. I get that, but just in this tough of a market, you know, if you're down, you know, even if you missed all 10 of them, that would only mean your account's down 2% after the whole week.
Yeah.
Which I know that sucks, but at the same time too, don't get me wrong. On top of that, I'll be moving up my stop to break even pretty quickly on a lot of those. You could even take gains at 6%. That's still 3 to 1.
Yeah.
So at 6%, you could take a gain, which would offset almost the entire thing. And if you have 1 or 2 that work out to be break even, your week's going to be almost a wash right there.
Yeah.
So
I remember on one of the interviews with Mark Minervini, he talked about how he sometimes or often he sell half. Let's say a stock goes up 8%. I think that's what he used. He sell half the position, and you know, keeps the stop loss to give it some room to still run.
Yeah.
The problem with that for me is that would just slow down my growth so much because of my smaller amounts right now, plus the fees and everything, which is something I'm working on, by the way, to change my platform. So I'm trying to get rid of the conversion between the currencies and also the fees.
Right.
Hopefully I can get that sorted. But what are your thoughts on something like that, Dayne?
Well, I have thought on the upper side, I don't like to sell out. I like to hold. I like to sell the entire position. I've just found that there's so many times I took half at a certain point, and those are the ones that run up. And then I'm like, I would have made so much more if I just held the position.
Yeah.
I actually like Minervini's rule on the bottom side. Sometimes he uses what they call the 3-4-5 rule. And what that is he sets a third of the position at a stop loss of 3, another third of the position at a stop loss of 4, and another third of the position at a stop loss at 5. So for instance, you know, you and I are talking about like decreasing that stop loss. You could do like, you know, me, I'm talking 2%. I could do 2, 3, 4.
Yeah.
You know, and then it lowers, you know, the cost of, you know, every time you take a loss, you know, where it's at. You could do 1, 2, 3, which I know that's really tight. But, you know, like we said, these things should break out. They should work. So if it's not working almost immediately, You've either mistimed it or whatever.
Yeah. Yeah, it's
So-
interesting. It's just a few techniques. Maybe I will look more into them when the count is a bit bigger and stuff like that.
Yeah, and I'm kind of
But like
okay.
you say,
If my stop loss is like 3% is already tight. Like most of these guys are using like a 5% stop loss.
yeah, they do.
So it's already tight. So
It would suck on USEG, for example, to have sold half position at 8%.
yes, that's why I like to let that's why in terms of me restricting, it should always be on the downside. Like your goal is to let the winners run. So if you start setting rules to get out of things early, I feel like you're limiting that upside. I've gone back and forth because you look at some of these charts, and if you had used a 10-day moving average on a bunch of these things, like I could see how well you would do, but then also your holding period gets much longer. And a lot of times it doesn't work out, and it actually you don't make as much money. So, maybe in a really bullish market, because like Qualamaji, like when Christian's talking about his selling half his position and then holding the rest until it breaks down below the 10 moving day average, after COVID and everything was flying up, that's probably a really good rule to use because you're really letting those winners extend, and it's in such if it only takes an extra week for me to make another 30% on a position, that makes sense to me to hold half of it for that long.
Yeah.
But in these markets where we're moving sideways, like it's not going to hold. Most of these things are going to break down. It's tough already just getting into the names, let alone finding breakouts. So I feel like you have to adjust your rules to be really tight during these markets. Yes, and like I said, it will eliminate a bunch of trades that you could stay into, but at the same time too, if it also protects you from that downside loss, and you only need a few winners to offset it totally.
Yeah.
And if you catch one big name, you could make really good returns for that 1 week or whatever time period you're looking at, and it's going to open up almost the rest of the trades. Like if we had one more USEG or like CYD or BBAI, if I'd gotten any of those names correctly, that offsets a 2% stop loss on the rest of my month.
Yeah.
One trade.
Yeah. And those exist pretty well, maybe once a week. What do you think?
Yeah, I would argue once a week or once every other week. Those are out there.
That was also a good point from Sean Ryan. I think that when he reflected on his beginning of his trading journey, he said like he struggled a lot with FOMO and he took positions too high up and stuff like that. I did the same.
Yeah, I did too.
But that was not because of FOMO. It was more like I had misunderstood a little bit, But he said like now something that he has feel like he has improved was he doesn't care anymore because the more will come, more options will come, more opportunities will come, and he knows that, and he's just like, okay, it is what it is. I will look for the next one. I think that's I'm not sure if I should call it like underestimated point, but I think it's an important point that is a bit obvious maybe, but still a lot of people probably struggle to act on it. Like, okay, if you miss out, just leave it and move to the check again tomorrow for something new.
Yeah, and even this DC, I mean, this is the kind of thing where you see one of these big gap ups and you're like, oh my God, I got to get on this name. Well, it's up 22% for the day, but, it dropped down probably, 7-8% from there. So yeah, if you could perfectly time the bottom of these things and get in on some of these gap ups, like, yeah, you can get into these names and you can make the swing trade. But in my mind, your chance of getting stopped out on this is so high. I'm not looking at these ones that gap up so quick. I've told you, on mine, the open green candle means it started low and worked its way up. I'm looking for those open green candles because to me, that means I already know where the downside for the day was. I'm looking to see what it can get up to. And it's obviously it's easier to say that in hindsight because the candles are there and you have them. It's not the intraday, but you can still usually tell on these ones that are going to work out like that. So
yeah. Another one I have on the watch list is TITN Machinery. TITN.
yeah, this is another one I got stopped out of on one of the days.
You
I think I
took
took it on Wednesday, and it still stopped me out.
Yeah. Because I know I refer to these interviews a lot now, but another thing I also noticed that a lot of them were saying is that they like charts a bit similar to this one, that it starts to come back from a very negative trend. And then you can see in the period, like, 20th of December to 13th of January, it even drops a bit lower and has the last shakeout before it starts to move up again. And they say like they aim then to catch the second leg of the uptrend, which will, if this breaks out, that's where you will have the second one. But how do you read this now, Dane, when it pulled back so much on Friday? I think it still looks good.
Yeah, I mean, it's still consolidated. It's still in this range. I mean, if you look at the range here,
Yeah.
I would argue the range is from like, mid 17s to almost $20 is the range. So if
Yeah.
it breaks out of there, that's what I'm looking for. And it's still consolidated. I mean, the 20-day is just catching up to this. And like I said, Friday is an example of a day where everything was down, almost
Everything, yeah.
everything. So this candle is just, not only do you have downward pressure because it had ran up a little bit here, but you have downward pressure from the rest of the market, which make these more exaggerated.
Yeah.
Now, yeah, can you always read it perfectly? No. That's the whole point of technical analysis. That's why anybody who just focuses on fundamentals and looks at these are like, well, it doesn't work every time. And we're like, yes, I know it doesn't work every time. That's the big difference, is because it doesn't work every time, you have to hedge the odds in your favor that you're making it work, or you're catching it enough that it does.
Yeah.
Which, fundamentals, same thing. You don't call the business correctly every time. You don't always catch, that business that turns around, or that market leader doesn't stay the leader. That's how fundamentals fail too. So the argument goes both ways, which is why I always think the arguments are kind of, just you're missing the forest for the trees here. Either way works. You just have to understand what's going on, and you have to understand the mentality and play to the rules that make it work.
Yeah.
But-
And this also has a 400 million market cap. The last earnings was a big surprise on EPS, at least.
Right, and that's usually why, like we said, that's what pushes stocks up, is the fundamentals. Regardless, sometimes there's no news and something just moves because there's heavy volume. But especially in these markets where things get uglier, Christian, he had talked about that he usually sticks to EPs in these markets.
Yeah.
Because he's like, you don't see breakouts on just random stocks with momentum. He's like, the only ones that really break out are ones that have really surprise earnings and revenues.
Yeah.
So...
yeah, he's very clear about negative market breakouts doesn't work, so don't trade them. But he speaks to the masses. I'm sure he does a lot of breakout trading for his personal.
Yeah, and
style.
maybe I find that I end up being down, another 5% over the next month or two, and the whole markets are pulling back, and then in the future, I'll just be like, you know what? In these, it's not even worth it.
Yeah.
It's not worth trying to trade breakouts. It's just too tough in this market, which a lot of people have said it is. My attempt is going to be to just tighten my rules. And maybe that's wrong. Maybe that's right. I don't know. We'll find out. That's why.
But I think that's an important point too. Like, you need to go through it for yourself and get the experience of being in a period like that. I think that's valuable.
You need to know it yourself. I can't. You can never. I mean, don't get me wrong. I take all kinds of valuable insights from other people, but it's when I do it myself, that's what clarifies in my mind. Like, okay, this works. This doesn't work.
Yeah. And when you do it with your real money and all that, it's just different.
Right.
Yeah. No, but Titan Machinery, it's one so you tried to take it on Wednesday, I assume.
Yeah, somewhere like in here, it looked like it was kind of breaking out of that $1950 range, somewhere in there.
Yeah.
And it didn't work out, but
no. But I think this can be a good one if it works out.
Yeah, I mean, it looks good to me. I mean, volume's starting to compress a little bit here, so we'll see. It's a name that I'll definitely keep an eye on. Yeah,
I agree. I think that's it for my watch list. Actually, MFH is another one.
What was it?
MFH.
H, is that what you said?
Oh yeah, M. Yeah, like this.
Yeah. Yeah, I mean, yeah, this looks like it's consolidating well. So we'll see.
Yeah.
We'll see where it can go from here.
Yeah. I'm not sure. Sometimes on TradingView, they don't give you the earnings. I'm not sure why, but yeah. This is just on my list, I think. So, I guess we have talked about this one before, but KLTR still is on the list. No, K. Sorry.
Oh, Coulter.
Yeah. Yeah, this one. It's a bit more ugly now, I think, but I'm still having it.
Yeah, it's going to need some strength. But like I said, I just think there's going to be a lot of pullbacks on the breakouts right now.
Yeah. And they had negative earnings now.
All right, well,
So-
I do got to get going, so I think I'm going to call it here.
Yeah. Well, good. We have done 90 minutes already, so.
There we go.
I think
thank
we
you,
have
anybody
gone
who tuned
through-
in. Please continue to subscribe or join the Discord if you can.
Yeah.
But other than that, yeah, we'll see where next week goes. I think, like I said, I'm going to play it a little bit more conservatively. And if we start to see some more breakouts and, you know, the numbers start to jump up, or maybe there's some good news about the economy, whatever, blah, blah, blah. I think everyone's like nervous. We don't really know what's going on with inflation, and the whole world is changing right now, you know.
Still what's going
There's just
on.
so many questions about where we're headed.
Yeah, I agree.
So you
we
just
need
see it in the
some
markets
answers.
too.
Yeah.
All right, well, everybody,
All right.
have a good rest of your weekend, and we will be back next week.
See ya.
Peace.